Good morning, everybody. Welcome to the month of May. We're going to start in just a second. Man, do we have a lot of stuff to talk about. All right. Let's see here. I have to update a couple of alerts. A decent move in treasuries before. I'll update you guys on this here in just a second. All right, listen, let's get started. It's May 1st. Welcome to the month of May. Thanks for being here. Good to have you here. I'm going to try to take it a bit easier today and tomorrow, quite frankly, because April really has been, it was fun from a trading perspective and in full disclosure, very profitable. But, it also was, it takes a lot out of you for having a month like that, which actually gets me to the first chart I want to show you, which is the weekly chart, monthly chart on the, let's just do it on the S&P 500. But if you're here for the first time, folks, thanks for being here. This is our Set the Market morning call here at the Steady Trader, steadytrader.com. And I'm going to quickly populate this stuff here for you guys in a second, and then we'll look at this. But what we're doing here, if you're here for the first time, we're going to go through our top few things on the notepad. Camera keeps changing. I'm looking at the wrong camera. Let's go this one here. All right. We're going to go through the top few things here on the notepad. And really, I want to start off with the monthly chart of equities and then give you kind of a bit of an outlook of how we're kind of thinking about what equities might do here in the month of May, U.S. equities. I want to update you guys on the macro stuff, meaning on gold and bonds. And I can tell you in full disclosure, I'm now long 2-year Treasury notes futures. I disclosed that yesterday in real time in Trade Ops in the members area. We'll quickly talk about Max 7 and how that folds into a potential bear market bounce as well. So let's start off with the monthly chart. So this is I actually just completed a podcast recording with my colleague and analyst JB, and we just talked about this. So make sure you watch that podcast as well. We go into more detail there. But this is the monthly chart for the month of May for the S&P 500. And if one were to just wake up today after having fallen asleep on March 31st, we'd say, well, what happened? I mean, month over month, it's nothing. In fact, the Nasdaq 100 was actually up in the month of April, believe it or not. So it's all, this is all memory that a lot of that muscle memory that we've been talking about, a lot of people have of blindly buying dips. And a lot of this is algorithms, by the way. And also on the retail side, no one sold a single stock. And I say no one, for the most part, no one. Investment advisors, we talk to them, and we've got a great insight through one of our partners on that. No one has sold anything. Everyone's long Max 7, only long Max 7 all day long. And of course, with a day like today, waking up, Microsoft is, blowing higher. Everything seems awesome. And it may be, but it might not be, right? It really could be very different now. And you saw a taste of that yesterday, by the way, when we had GDP come in, and GDP was actually weaker than expected, and you saw equity sold off, and then we had a lot of narrative spinning, and so we ended up with a month like this. So what do you do with a month like this? I'm going to come back to this month like this in just a second, but let me first show you what happened yesterday. So yesterday would have been April 30th, the last trading day. Look what happened right at the end, like literally in the last half an hour of trading on yesterday, the last trading day of the month. It was this move here. This was literally the last 25 minutes was this. Okay, I'm going to try to box it in a little bit for you so you can see. And basically, this was one of the largest, I just found this out early this morning, one of the largest rebalancings into stocks that we've seen in a very, very long time. happening in the last 20, 25 minutes of trading. And if you look at, like, for example, right now where US equities or the S&P 500 is trading, it's really not much above where it basically closed yesterday. Yes, we had some Microsoft news and other stuff, but for the most part, if it wasn't for that, the S&P is up like 50 basis points. It's just nothing to sneeze at. But given the volatility we're seeing, it's not that much. So you have to take those month-end fun games into account when you do this kind of analysis. So the question, of course, is where does this leave us now for the month of May? I still think, and we talked about this chart all week long, so hopefully you guys remember that chart that I've been showing. I still think that we're in a trading range. So if you look at this on a daily chart, you can kind of see that trading range looking a little bit like this. So, for example, the SPY S&P 500 tracker, we've talked about it all week, by the way. So hopefully you were here all week and you heard me say that we think there's upside to certainly the the 560s, which fills a gap, the down gap from April 3rd, but possibly up to 570-ish plus or ish. So that basically would mean that we have a trading range, which is something like this. Here. So you could see us possibly, pushing right back into the 200-day moving average or kind of, that kind of area. And then possibly at that point, if it matches up, you kind of would see stocks go back down again. So the trouble here for the bulls, the V-shaped reversal prayers, is that the downside potential from here is like another 15%, right? Once we reach the top end of that range. So that makes it, I think, very challenging for people to risk manage this, because the volatility, I don't think, is gone. I'm not saying we have to have VIX 60, 70 again, but there is sort of the reward to risk upside versus downside isn't very good, if that makes sense, right? So that's something that we're watching very closely. Now, what's really interesting right here, right now, this morning, is it's actually quite curious, is we had a decent rally earlier this morning in the 2-year bonds. And if you were here yesterday, you heard me talk about 2-year bond yields. So when bond prices go up, yields go down, right? And, I think anyone that's ever looked at a chart before will say that this is kind of teetering on a potential breakdown. This is your 2-year yields. And if you go back and, I remember drawing this chart for some people a couple of years ago or a few years ago, and they saw that once these trends break, it's a steady trickle lower. So if I were to just kind of replicate this sort of drawing here, you could kind of take this and see it. It works both at tops and bottoms. So I actually think that 2-year bond yields could be heading towards about 2.5%. And so I'm long, in full disclosure right now, as of yesterday, 2-year bond futures, and will likely be for the foreseeable future. And again, you can see the same thing on the downside. If you were to make this the bullish version of this would be the same, right? So I think economic data is not going to get much better for the next couple of quarters, which is likely why we're going to start to see bond yields go down. Now, what's important, and again, I realize a lot of you guys only like to know what's Microsoft going to do. What's important to understand for this thing is the relationship between the dollar and pretty much everything else. So if the dollar were to bounce here, that may or may not be bullish or at least neutral for equities, but it's probably also a result of people buying 2-year notes, meaning hiding in short-term U.S. Treasury paper. Why would they do that? Because they think that, economic data is getting worse, in which case stocks shouldn't be going much higher in aggregate. And 2-year yields, of course, would go lower, which is what I just mentioned here. Now, for a lot of you guys here that don't do futures, and I get that, that's not even really the point. We had this discussion yesterday in trade ops. One thing that one can do is one can buy, like, say, the SHY ETF. And this was a discussion that happened yesterday in trade ops in our members area. Some people were saying, well, if I buy SHY ETF and it doesn't look like it has a lot of percentage moves. First of all, you're forgetting the yield. And number two, bond investors, traders, typically use leverage, right? Real bond traders don't use like the ETFs. They use like I use futures, for example, or options at the very least, or maybe even options or futures kind of thing. So so that's kind of what we're seeing here is in the bond market. So I would be careful here, getting too complacent on the equity side. Just bringing it back to what I just said. Again, we've been saying it all week long. Nothing new. We think there's a lot of trapped buyers up here. This is the chart that I started off on Monday with, and I'm going to finish off here today on Thursday for our Set the Market morning call. Because we do this show Monday through Thursday. There's a lot of trapped buyers up there, and whether we fail right now today, or we fail somewhat higher from here, a few percent, or maybe even a little bit beyond that. I think all that is fair game. Just keep in mind the volatility. So if one is looking to go short, I'll give you, again, I can't give you advice, obviously, but through the lens of education, I can tell you what I'm doing. So obviously we were skeptical of the market heading into tariffs. Started doing a lot of very quick trades, particularly on the short side, on and about April 2nd. I remember I was up almost all night on the April 3rd, 2nd into the 3rd. And then we got very oversold, and that's where, things like our vertical X Pro indicator really allow us to get long something when something's oversold. Like, for example, Apple, and again, 20 pages of other stuff got oversold. So we got long, we sold volatility, bought some futures, yada, 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 did a lot of trading. Now we're at a point where, we're seeing a lot of the V-shaped reversal prayers I said before, getting very loud again. People that have only been in the market for 10 to 15 years, again, have never seen a cycle, inexperienced. They know, and it makes sense, Carfranco. I'm not even blaming them. The muscle memory, is that they just see all-time highs again, particularly if their favorite characters on CNBC or high-fiving each other for a good Microsoft print. But if we fail here, what I'm doing, I started looking into some shorts. I do a lot of shorts, a lot of trading in macro stuff via options, futures, and some ETFs. So currently, I'm short a little bit of futures, but I probably would be adding more. I'm sure it's just it's like a starter position, personally, and this could be short SPY or Q. It's all the same. But I'm not going to add more until either we see a real reversal to the downside, like a real bearish reversal, or we push up higher into the upper end of that range, and then I'll incrementally add another quarter, another third, and so on and so forth until I'm fully allocated on the short side for a trade. That's what I'm doing right now, and again at the same time, long 2-year bond futures. Again, this could be done with ETFs as well. It's just that it doesn't really have the same leverage, obviously, if you're just long with an ETF. So that's what I'm doing. It's also ticker Thursday, if you guys remember. So let's quickly go through that. Bill's asking, what does this rebalancing in stocks mean? Oh, so like if you're a big hedge fund, for example, and you have to have a certain metric of stocks versus bonds in your portfolios, and all of a sudden because equities got crushed, or you were even short, you have to bring that up to par by month end. That's what that means. It doesn't mean they could start unwinding these positions today, like in 15 minutes if they wanted to. So that's why I'm saying this is a very thin edge, and the smartest people I talk to, again, they could be wrong, but they're all net short equities. It's not that many of them, and long to your notes. So if you guys have any other tickers you want to look at, let me know. Devendra wants to look at UVXY. Okay. Let's have a look at UVXY. Yeah, so what the question really, Devendra, again, and I have to keep coming back to this, what you're really asking is what about the VIX, right? UVXY means nothing to me because that's not really what you're betting on. What you're betting on is the VIX. So you have got to learn this, guys, each and every one of you. If you keep giving us tickers that have nothing to do with what you actually need to track, you need to analyze the underlying asset. It's so important to understand. So we think the VIX has reached the lower end of the range, just like the S&P has reached the upper end of the range. So, you need some seriously good news here, a China deal or something which by the way is now is now consensus. Everyone expects that, and it can happen, right? I have no edge on that, but that's kind of what people are expecting right now, and so I would expect the VIX to start finding a bottom here somewhere near 20-ish. Listen, they can dip into the teens. It's possible, but I think somewhere here, again, if that lines up with the S&P finding resistance at the top. So I don't have a bet on this right now, quite frankly. I know what I do know is that VIX options are a lot cheaper now than they were, a few weeks ago. So I haven't yet bought any puts. I'm in the futures market right now. I'm hoping the VIX comes in a little bit more, maybe gives us a 22, 21 handle, and then maybe I'll start nibbling on some puts. And then, as I said before, kind of working on increasing my short position there. What is the future symbol on the 2-year bonds? Jim, you guys, I have to be careful giving you these symbols. There's a big compliance problem here. Go to cmegroup.com, but I will tell you, the 2-year note is ZT. ZT is the ticker, okay? But please go to cmegroup.com because you better trade the right month, right? Otherwise, you're screwed. You really got to pick the right month there. Don't use the wrong one. And please educate yourself on futures, okay? The reason I'm always very hesitant talking about futures too much is because it attracts animal spirits of people and greed, right? So you guys need to educate yourself on futures. I'm happy to do a course on it if you guys want to at some point. We can do a boot camp, but I'm hesitant talking about it too broadly because it attracts, again, a certain crowd. And this is not picking at anyone here. That's why I'm hesitant doing it. And also compliance-wise, it gets into gray waters very quickly. But that's it, James. So hopefully that's helpful. Again, go to cmegroup.com. That's where you need to find out all that stuff. Bob is asking, VIX is 1 penny away from filling the gap of 23.6. Good to know. Why is the 10-year bond down? Okay, so the 10-year futures, again, you need to look at the futures, right? So the 10-year note would be, ZN is the 10-year, right? So that's what you want to look at here. And why is it up is the question. It's down in yield, it's up in price, right? So the inverse of price is yield. So you want to look at this in yield terms, right? So why are yields down? Why is price up? Listen, I'm telling you, I don't think yesterday's GD print was an accident. And we actually just had economic data before where the jobless numbers were actually worse than expected. That's why. That's the why, right? So look, if you guys want to learn more about bonds and futures, I'm happy to do that. I'm just, again, like I said, I'm very reluctant doing it too much here publicly in the Set the Market because it does, again, attempt to attract a type of kind of animal instincts, and I'd prefer to you have to learn about this stuff. That's the point. So yeah. Anyway, listen, folks, thanks for being here. That's it for Set the Market for this week. I'm going to take it a bit slower here for today and tomorrow. God willing, probably won't happen, but I'll try. And I'll see you guys all over in Trade Ops in about 10 minutes. And we'll do some trading and do some stuff. And then certainly back here Monday morning. Again, please make sure you subscribe to our channel. Very, very important. Hit that subscribe button. Give us a thumbs up, like. Also, there's a video that is right on the front page of our channel. I'm going to quickly show it to you. Please go ahead and watch that. That would be awesome if you could do that. It's labeled make $500 a day. That's just like the label of it. I talk about sort of my journey. We're going to start try to make one of those kind of longer form videos once a week. I think that'll really help for everyone. So see you guys over in Trade Ops and back here Monday morning. Have a great weekend. Take care.